In this video, I'm going to be showing you the easiest crypto trading strategy to help you to make consistent profits every day. With this simple trading strategy, you can make as high as $100 every day, $200 every day, $500 every day, even $1,000 every day, depending on your capital. Now, if you're a beginner in crypto trading, especially in futures trading, you can use this strategy. This trading strategy I'm about to show you, you can use it whether you're a day trader, you can also use it whether you're a scalper, and you can also use it whether you're a swing trader. So whatever kind of trader you are, you can use this simple trading strategy I'm about to show you. So before going into all of the details, please make sure you like this video and make sure you subscribe to the YouTube channel if you are new to the channel. Thank you. So as you can see on the screen, this is my TradingView chart. TradingView is what I use for all the analysis I do. So I would advise you to use TradingView for all your analysis. And if you don't have a TradingView account, you can use the link in the description of this video to create an account on TradingView. Now, the first thing you need to know, or the first thing you need to learn to understand this easy crypto trading strategy, is to understand how to identify trends. That is, how to identify uptrends, downtrends, sideways trends. Now I'm going to start with the uptrend line, which is the first trend line. Now, what is the uptrend line all about? Now, in trading terms, uptrend line means that there are higher lows and higher highs in the market. That's just the meaning. It means the market keeps going up. That's a simple way to explain it. I'll draw it on the chart and show you the meaning right now. So I'm going to look for the part in the chart where the market is going up, and then I'll show you what uptrend means. Now, as you can see on the screen, from this point right here up to this point right here, you can see that the market kept on going up. Now, let me pick up my trend line to draw it, and then I explain to you. So to pick your trend line on TradingView, you come to the left side of the screen, and then you can see where my cursor is, this trend line, just select it right there. That's your trend line. So I'll just come right here and select this and put it. So I'll just draw it right here. So this is my trend line right here. So this is my uptrend line. Wow, what is this telling me? This means that, like I said, there are higher lows and there are higher highs. Now, if you look at the candlestick, that is just a single candlestick. Let me just make it big so that we can look at just one candlestick. Just one candlestick. Now, if you are looking at a single candlestick, the top of that candlestick is called the high, while the top bottom of that candlestick is called the low. That's the meaning. The top is called the high, while the bottom is called the low. So you have the high of the candlestick and then the low of the candlestick. And remember, I said the uptrend means you have higher highs and higher lows. That is, the highs are going higher and then the lows are also going higher. That's just the meaning. So that means that, for example, if you look at this first candlestick right here, let me make it bold. This first candlestick where I started the trend line from. So what this is telling you is that the high right here keeps going higher, and then the low at the bottom of the candlestick keeps going higher also. So both the highs and the lows are both going higher. That's just the meaning. And if you look at what I've just drawn right here, so let me just bring it back. So you can see right here that the candlesticks kept on going higher. So you can see that the highs were going higher. So if you look at the candlesticks right here, kept on going higher at this point, higher at this point. Now, some of you might not say, okay, since I'm saying they are going higher, what of the parts where the candlesticks or the chart keeps going back down a little bit and before it goes back up? It's part of what candlesticks will do on the chart. Now, how you are going to understand this better is when you are drawing your uptrend line, the first thing you should make sure you are doing is that your uptrend line should be at the bottom of the candlestick. So you can see this uptrend line that I just drew right here, that is this line. You can see that I drew it at the bottom of the candlestick. I did not draw it above the candlestick right here. So I did not draw it on top of the candlesticks. I drew it below the candlesticks right here, where it is now. So that's the right way. Now, when you are drawing your uptrend line, make sure it is touching the bottom of at least 3 candlesticks. At least 3 candlesticks. So if you look at what I just drew right now, it is touching the bottom of this candlestick. This is 1. Let me put my arrow. So to put your arrow, just come here to the where you have this brush, click the small arrow beside it, and then you see where it says arrow mark up and arrow mark down. So let me just pick this arrow mark up. So as if you want to put arrow. So you can see this first one right here. Let me put it here. This is 1. And then if I pick it again, you can see the trend line is touching this again here, 2. And then the trend line is also touching this at this point, 3. Let me bring it here, 3. So it is touching. Let me move it up so I can touch it very well. So you can see it right here. It is touching at least 3 candlesticks. So you can see it touching 1, 2, 3. That's how you can know you have a perfect uptrend line, or even if it's a downtrend line. I'll teach you how to do for downtrend line. So you can see right here that it's touching 1, 2, 3. Now, those 3 candlesticks that your uptrend line is touching, you see that the highs and the lows are going higher. So you can see right here that this is the high. So let me make this big. So you can see it very well. Okay. So you can see right here, this is the high of this candlestick and the low of this candlestick. Don't forget, I said the high of the candlestick is the top of the candlestick, and then the low of the candlestick is the bottom of the candlestick. Now, if you check this second one right here, you can see the high of this candlestick is higher than the previous one right here. So you can see this higher one is higher than the high here, and the low of this candlestick is higher than the low of this candlestick right here. That's the meaning. If you go to the next one right here, you see the high of this candlestick is higher than the high of the previous one, while the low of this candlestick is higher than the low of the previous candlestick. So that's what it means to have higher highs and higher lows. So that's the simple way to identify uptrends on the chart. Now, let me do it once again so that I can understand it again. So let me just look for another part on the chart. So you can see right here, just before the one I just drew right here. So this is another uptrend line. You can see the market kept on moving up at this point. So I'll put my uptrend line right there. So don't forget to select your uptrend line. Just come to the left side of the screen. This is right here. So I'll just select this. So I'll just select that right there. And then I'll draw my uptrend line. So to draw my uptrend line, let me draw it first before I now show you the lines. So you can see I'll draw my trend line right here. So let me just make it big so you can see it very well. So this is my uptrend line right here. You can see the market kept on going up at this point. Don't forget I said uptrend is when you have higher highs and higher lows. And I said when you are drawing your uptrend, it must be at the bottom of the candlestick, not at the top. So not at the top right here, at the bottom right here. That's where your uptrend line should be. I hope you understand. So let me make it shorter so you can see it. So that's where your uptrend line should be. And I said your uptrend line must touch the bottom of at least 3 candlesticks. So let's see if it's touching. So let me pick my arrow again at the left side. This is the arrow. So I'll just click the arrow right here. And then I'll just come here. This is the first one, it's touching. So you can see it's touching this one again right here. So you can see it's touching this one too. It's touching this. It's touching this candlestick. It's touching this. So you can see it's touching even almost 6 candlesticks, the bottom of 6 candlesticks. So this is a perfect uptrend line right here. So that's the first trend line. Now the second trend line to identify on the chart is the downtrend line. So downtrend line is the opposite of uptrend. So let me look for where we have downtrend. Now you can see on the screen, you can see that the candlesticks are going down at this point. So you can see from this point, from the top right here, it kept on going till this point. Kept on going down till this point. Now let's draw our trend line. To draw your trend line again, don't forget to go to the left side of the screen. This is it right here. Click it. Now your trend line at this point can be in different ways. So let's, for example, you are the kind of person, maybe you are just trading for a short period of time. You can just put your trend line somewhere around this point. So let me just put my trend line here. So you can see the trend line is beginning from this point right here till this point. But let's say, for example, you are the kind of person, maybe you are trading for a longer period of time. You can just move your trend line from this point. So you can see that candlestick start moving down from this point. And then I'll just adjust it at the bottom right here. Just adjust it to this point right here. Whichever one you are doing out of these two, they are both correct. And I'll show you why. Before I go ahead and do that, what does downtrend line mean? Downtrend line means you have lower highs and lower lows on the chart. Now, don't forget, I told you that for a candlestick, the top of the candlestick is the high and the bottom of the candlestick is the low. So, for example, right here, you can see at this point, these candlesticks are moving down. So, if you look at the candlesticks right here, you can see that the candlesticks were going down. So, the highs were getting lower and the lows were also getting lower. That's the meaning. Now, remember that when I was doing uptrend, I said your uptrend line must touch the bottom of at least 3 candlesticks. Now, for your downtrend line, it must touch the top of at least 3 candlesticks. So let's see. So to do that, I'll click on my arrow. So I'll just come here and select my arrow, but this time I'll be selecting the arrow down. That is the arrow mark down. This is right here. Just select it. So for us to do that, I'll just come right here. So you can see this is the first candlestick is touching. It's touching this candlestick right here. And then it's touching this, it's touching this. It's touching almost everything right here. So you can see that the trend line is a perfect downtrend line. It is touching the top of at least 3 candlesticks. That's the first one. But let's say, for example, you don't even want to start your candlestick from here. Let me just select it again. Let's say you want to put it from here. This first example I did earlier. So that means we adjust it at this bottom right here. So now let's see if it's touching the bottom of at least 3 candlesticks. So I'll remove all of these arrows. So let me make it big so you can see it very well. So you can see it is going down, but let's put the arrows and see. So I'm going to put the arrows right here. So you can see it is touching this candlestick right here. It's touching this right here. It's touching this, it's touching this. So you can see it's touching about 4 candlesticks right here. So it's still a good downtrend line. So I've just shown you how you can identify the downtrend line on the chart. So this is the first step to understanding this simple trading strategy I'm about to show you. So the first thing is to identify trend lines. So I've just shown you how to draw your uptrend line and the down trend line. This is the first thing you should always check on the chart whenever you want to do your analysis. This is the first thing. It helps you to know the direction of the market even before you take any trade at all. Now we have another trend line called the sideways trend line, but it's going to take us to our next step, which is how to draw key levels. So key levels is when you can identify this third trend line. Now for the key levels on the chart, we have two main key levels on the chart, which are the support levels and the resistance levels. Now in case you've been hearing of resistance and support and you don't know the meaning, then you will learn it right now. Now, just to simply explain this support and resistance are lines or levels where you have multiple rejections on the chart. They are levels where you have multiple rejections on the chart, and then your support is at the bottom of the candlestick while your resistance is at the top of the candlestick. Let me show you. So I'm going to draw them on the chart. So to draw your key levels, that is your support and resistance, you can use a line and you can use a rectangle. But for me, I always use a rectangle. My students know me. I always use rectangle. So if you want to use a rectangle on the chart, just come here to where you have this arrow icon. Just click on the small arrow beside it and you'll see where you have rectangle. So this is rectangle right here. So let me just draw it first, then I'll explain it. So let me put one right here. And then I'll draw another one again at the top. I will still explain how I'm seeing it or how I'm able to decide that that's the resistance and support line. So you can see I've just drawn something on the chart right here. So let me just make it big so you can see. So I've just drawn something on the chart right here. So I'm making it bold so that you guys can see it very well. Now, like I said we have support and resistance, and then support and resistance are key levels where you have multiple rejections on the chart. Now, let me start from the left side of the screen. So you can see right here that on the chart, the candlesticks were moving up. Let me make it big so you guys can see it very well. I want to make it big. Yeah. So you can see at this point right here that the candlesticks were moving up from this point. And when it got to this area right here, it moved down. Now it moved down again and started going down. And then from this point, it went up again. So at this point again, you have another rejection. So let me just use a trend line to show you guys this. I'll just pick my trend line right here. This trend line. So again, like I was saying, I said the candlesticks were moving up at this point. So the candlesticks were moving up to this point. And then when it got to this point, it started moving down again and then came down to this point. And then at this point again, it went up to the same area. Now that same area as the previous one, it got here again and got rejected again. So it got rejected and started moving down again at this point. Now at this point again, it got rejected and started going up. It got to this point. It didn't reach this point. It just got here. And at this point again, it came down again and got rejected and came to this point. This same area where this previous area here, it came to this point. And at this point, it got rejected again and moved up. And then it moved up, got to this point again, and then came down again to that same area. This same area, sorry, here. And then it went back up to this previous one. And then it got rejected again and started moving up and down. So let me just skip to the end. So you can see it got again to this point. To this point. And then it keeps on going to those areas. So it keeps on going to those areas and then it keeps on rejecting and then keep going back and forth. So let me just finish it right here. So and then it comes right here and then we have a breakout right here. So you can see from what I've just done right here that these two rectangles are the key levels or the key areas on this chart. They are the part where we have multiple rejections on the chart. Now, don't forget, I also said the resistance is the one at the top while the support is the one at the bottom. So just like when you are saying you are supporting something at the base or at the bottom, that's what the support means. So you can use that to always remember what support is always at the bottom. It's the supporting the base, or it is supporting it at the bottom. You can use that to always remember it. So you can see this is the support right here and then the resistance is at the top. And I said we have multiple rejections. So these are the rejections. Let me just use my arrow to show you. So I just come right here. This is where you can see the arrow, this rectangle part. Click on it and then click on arrow. So let me just use this arrow. So where do we have the multiple rejections? So on the support side, you can see we have one rejection right here. We have another rejection right here. We have another rejection right here. And we have another rejection right here. We have 4 rejections right there. Now for the resistance, we also have rejections right here. We have rejections right here. We have rejections right here. We have rejections here. We have rejections. We have rejections. So you can see we have like 1, 2, 3, 4, 5, 6 rejections on the resistance. And then we have 1, 2, 3, 4 rejections on the support area. So when you have multiple rejections on the line or on the area, that's the key level or the key area on the chart. But how do you know you are drawing a perfect support or resistance level? How you will know is that in your resistance or support level, you must have at least 3 rejections right there. And you can see right here, for this support, you have 4 rejections, and for this resistance, you have 6 rejections. So like this on the chart, you have a perfect support and resistance level. So that's the second thing you must be able to identify on the chart. So the first step, or the first thing I said, you must identify your trend line, which we did. So this is the uptrend line, this is another uptrend line, and then this is the downtrend line. And then second step is to identify your key levels, which are your support and your resistance, which we have done right here. Now, once you've understood all of this, the next thing is, how do you identify signals? That is, how do you know what to do, whether to long or to short if you are trading on futures? Now, there are 2 ways you can do that. You can use breakout or you can use reversals. You can use breakout and you can use reversals. By the way, I'll be giving you a tip on what you can add to this thing to make it more profitable for yourself. But that will be at the end of the video, so keep watching. So like I said, you can add breakout or you can add reversals. Now, what is the meaning of breakout? Now, when I was explaining support and resistance, when I got to this point right here, you can see that I drew this arrow to go up. So this exact arrow right here, I drew it to go above this because we have a breakout. So this is a breakout. So a breakout means when a candlestick breaks a support line or a resistance line or a trend line. That's the meaning of a breakout. So you can see right here, the candlestick, let me make it bold so you can see it. So you can see right here, this candlestick is breaking this resistance area right here. That's the meaning. It is breaking out of it. That's just the meaning of it. So if you scroll back right here, you see that the candlesticks were inside this area. They were inside the support and resistance area. But when it got to this point right here, it broke out of it. That's the meaning of breakout. Now, when you see a breakout on the resistance line, it's showing you that the market is going up. And when you see a breakout in the support line, it means that the market is going down. That's the meaning. Now, for example, if you look at this point right here, after breaking out of this, the market just went up a little. Now, this is something that you call a fake breakout. A fake breakout. So you can see right here, we have a fake breakout. So the market just broke out a little bit and then came down into that area at this point right here. So you can see at this point, broke out, and then maybe if you had entered this trade, maybe you might have made just little profit, just little. But if you are looking to make huge profit, you can make huge profit with this movement. And that is why your own strategy will differ. So if you are the kind of person which maybe you are looking for maybe a scalper, you can use this breakout strategy right here. Maybe once it's breakout right here, just quickly enter your trade, and then in a few seconds you would have made some profit for yourself. So if you have larger capital, you can make larger profit for yourself. So like I said at the beginning of this video, whether you're a scalper, day trader, or swing trader, you can use this strategy. But this breakout right here is perfect for scalpers who just want to enter and make profit quickly. So if you're a scalper and you're doing analysis on this part right here, so once you say breakout right here, you can enter the trade if you want to quickly scalp. So, and you can quickly make 1%, 2% profits on your trade right here. But if you're someone who is looking to trade long term, or maybe you're a day trader, you want to trade for more hours, then this kind of trade will not be good for you, because once you enter the trade, you can see it didn't really go up, so you can see it came down at this point. But what happened after it came down? Now, if you look at this point right here, let me extend this. Now, if you look at this point, after it went up and then it came down to this key area here. Now, one thing I always do, and including a lot of traders, what they do is that once you see that there's a breakout right here, we always wait for that candlestick to come back and hit the resistance line. We want to see if it will hit it back. So if it comes back to this point and come to hit this resistance line right here, then you know that, oh, it is not a time to enter the trade. So if you had waited, you see that the market just broke out a little bit and then came back to touch this line at this point right here. And then it didn't really go up, it just moved up a little bit, which means that the volatility right here was very, very low. In case you don't know what volatility means how the coin is going up or down. So that means that it did not really go up, which means the volatility is low. So I won't want to enter when the volatility is low, because I want to make more profit trading. You understand? So you can see why you are waiting to see if the volatility will go up. You can see that it just came down to this point. So while waiting, you see that the candlesticks came back into this area right here, into this key level. So it came back into the support and resistance area right here. So this means that we have a reversal. So this is telling us that, okay, we have a reversal right here. And you can see the second thing is the volatility is high, which means that the market is really, really going down. So when the candlesticks are high, it means the volatility is high. That's just the meaning. You can see right here, the candlesticks are just tiny or small. That means the volatility is low, or the volume is low, whichever way you want to put it. So you can just come right here. You can see that the volatility or the volume is getting higher, but it's going higher towards the downside of this candlestick, which means that a lot of people are selling. That's just the meaning. So what you just want to wait for at this point is to see whether there will be a breakout out of this support. If there's a breakout with this high volatility or with this high volume, then you can go ahead and short. That's just the meaning. And that's exactly what happened right here. So you can see at this point, let me put my arrow. So you can see at this point, we had a breakout. So you can see the candlestick broke out right here, and then the candlestick started going down from that point. So we can see this is a breakout right here. So you can even see the downtrend line we drew. Let me extend it. So you can see the downtrend line is still valid if you put it here. So you can see even from this point right here, the downtrend line is already telling us from this point that the market is going down. So at this point, you can see that we even have double breakouts right here. And that is my best signal to always check out for double breakout. So let me make it big. What do I mean by double breakout? Double breakout is when the candlestick is breaking out of both the support or resistance and also breaking out of the trend line. So you can see right here that this candlestick broke out of this support right here. And at the same time, it broke out of this. And at the same time, it broke out of this trend line. So this is this trend line right here. So you can see it broke out of that trend line. That's the meaning. So if you have double breakout like that, then that means that you're having a good answer for yourself. So you can see it's coming to the bottom side and then it remained below that downtrend line for a very long time. So if you are shorting from anywhere around this point, even till the moment on the candlestick, you are still making your money on the chart. Now, as you can see right here, this is the live chart or the live candlestick on the chart right now. So let's say you want to continue the analysis from this point. So you can see that, okay, the market kept on moving down. I want to continue from here. You can also draw another key level right here because we have another key level here. So let me draw my rectangle. So just pick your rectangle and then I'll draw my rectangle right here. Because this is another key level that the market is trying to form right here. Now, some people might want to say, okay, why is it covering just this part right here? Obviously, you can see that we don't have anything at this point right here. So even if I say I want to extend it, there's no reason to say I want to extend because there's nothing here. So let me even make it smaller. Let me make it just smaller. The closest candlestick we have to this is around this point, and that's too far. So this doesn't make any sense. If you are trading, if you are a day trader or even a swing trader, you don't even need as far as that. With just this, you are okay. So let me just make it big back. And even this key area is still valid. As you can see, it is touching 3 rejections on the market. So let me use my arrow to show you. So you can see at this point, we have a rejection, we have a rejection right here, and we have a rejection. So it is touching 3 rejections on the chart. So you can see it is still valid. So if you are doing your analysis or at this point, what you want to check out for is maybe if there will be a reversal. So let's say it is going down, maybe you are looking to hope to long this trade. What you should be looking out for is a reversal. So let me extend this. Now this is the downtrend line and this is our support line right here. Don't forget support is at the bottom side of the screen. Now what are you checking out for? What you are checking out for is simple. So I'll click my trend line. So let's say from this point the candlestick breaks out of this place. This means that the market will continue in a downtrend. That's the meaning. So maybe at this point you're not sure because it's going down, up, and then come down to this point. At this point, if it breaks out of this area, because we've had 3 rejections here. So if it breaks out of this area, that means that the market will still continue in a downtrend. But let's, for example, from this area, it doesn't continue in a downtrend and then it starts to go back up. So let me select this line. So let's say it has to go back up and then from this point, it starts to go back up at this point. Now, this is a breakout because it's breaking out of this. But let's say, for example, it is going the other way around. So it goes back up from this point. One, you see that there's a reversal because it is reversing, or there's a rejection, whichever way you put it. So it is rejecting right here. The price is rejecting right here. So it's going back up. And also it is breaking out of this trend line. So if it breaks out of this trend line is what you should now be watching for at this point. If it breaks out of this trend line, then there's high tendency that it is going back up. That's just the meaning. Unless, for example, it goes down to this point. So let's say it goes down to this point right here. And then you have another candlestick coming back up. And then it goes back from this point. Let's say from this point, it goes back to this point. First, you are going to be seeing that there is a reversal because it is breaking out and then it is reversing back up. And then it is coming back to break this trend line. So you can long from this point. Now, another thing you can check out for is, let's say as it's coming down at this point, it doesn't really go down. Instead of really going down, it just went back to this area, this key level area. And then from this point, it doesn't break out. Instead of breaking out, there's a reversal. Now, if there is a reversal right here, it means that this is going down. That's just the meaning. So you just come in here to come and test this area again before going back to the downtrend. I hope you understand. So this is how you can use all of these things to identify whether the market is going up or the market is going down. Now, some minutes ago, I said I'll be talking about something you can add to this strategy to make it more profitable or to give you a higher win rate. And that is candlestick patterns. Candlestick patterns are one of the best things you can add to your trading analysis to give you a higher win rate. Now, if you're interested in learning how to add candlestick patterns to your analysis to have a higher win rate, you can learn that from my complete crypto trading course. The link to that course will be in the description below. In that course, you're going to be learning everything on how to use candlestick patterns. You'll be learning various candlestick patterns to help you have a higher win rate in your analysis. So let's say, for example, you've done your analysis and then you're entering a trade, or let's say, for example, you're even entering a short trade from this point. The next thing is, how do you set your take profit and how do you set your stop loss in a trade like this? So let's say, for example, you've done your analysis, you've done your support, resistance, trend line, candlestick patterns, everything, and then you've entered the trade. Now, how do you set your take profit and how do you set your stop loss? Now, there are 3 ways to do that. The first one is to use a risk to reward ratio. Now, what do I mean by that? So let's, for example, I want to enter the trade. Maybe after I've seen a breakout here, I now enter the trade at this point. So let me say this point. So I just put in the projection tool. So for the projection tool, this is it right here. This one, just click on it. So you see you have long position and for short position. So this is a short position. I'll just click on the short one. And then, so let's say I entered at this point. I'll just put it right there. So let me make it big so you guys can see. Now, I said the first way to do it is to use your risk to reward ratio. Now, for the risk to reward ratio, we have multiple risk to reward ratios. We have 1:1, 1:2, 1:3, 1:4, and so on. Now, let's, for example, you want to use 1:1. For 1:1, what it means right here is that your risk/reward ratio must be equal to 1. That's just the meaning. It means you're using 1:1. So what this means is that whether it enters your take profit or your stop loss, you are winning or losing the same amount. So what this means is that if this thing should enter your profit, your take profit, don't forget this is your take profit level. This line here is your take profit level, and the line at the top is your stop loss level. So let's say, for example, your target is $100. So that means that if this enters your take profit, you'll be making $100, while if it enters your stop loss, you'll be losing $100. That's just the meaning. So you are risking the same amount of money you are willing to make. That's just the meaning. But let's say, for example, you are using 1:2. Well, for 1:2, this one will turn to 2. So that means you have to increase your take profit. So you have to, let me just make it smaller. So you have to increase it until that turns to 2. I'll keep making it smaller right here. So let's make it to 2. So it must be on 2.0. So you can see it right here is on 2. This right here. Let me make it big just in case you're not seeing it. So this is 2 right here. So what it is telling you is that you'll be making double of what you are willing to lose. So let's, for example, your target for this trade is, let's say, $200. So that means that if it enters your take profit, you'll be making $200, while if it enters your stop loss, you are losing $100. Don't forget. So it means if it enters your take profit, you are making $200, while if it enters your stop loss, you are losing $100. That's just the meaning. So the same thing for 1:3. So if you increase this to 3, and maybe your target is $300, that means you'll be losing $100 if it enters your stop loss. That's just the meaning. So that's the first way you can use to set your take profit or your stop loss. So let's say I'm using 1:2 for this. So let me just extend this. So you can see at this point that the market started moving down. You can see it moved down, up. And then at this point is where it came to meet my profit. So at this point was where I made my profit. So you can see that it didn't even enter my stop loss area at all because of the trend line we followed. So that's another way you can use to set your take profit or your stop loss. That's one. Now the second way you can use is to use a fixed amount. So let me delete this. So the second way is to use a fixed amount. So a fixed amount is how much are you willing to lose. So in your mind, you must be having an amount you are willing to lose and an amount you are willing to make. So let's, for example, I want to enter a trade with $1,000. I can say, okay, I want to make $500 while I'm willing to lose, let's say, $100, $200, or $300. So you must have a fixed amount. And that fixed amount is based on your risk tolerance. So make sure that it is an amount you are willing to lose. So even when people are trading, what I always advise them is make sure you put your stop loss at an amount you are willing to lose. So that's a fixed amount. So that's the second way you can use. Now, the third way you can set your take profit or your stop loss is to use key levels. Now, what do I mean by this? So let's, for example, you are entering your trade at this point. So at this area right here, let's still use this area. Now, how do you know where to set your next take profit and your next stop loss? What you just look at is your key levels. Now you can see this key level at the top right here. So let me select it. This one, if I extend it and then let me put that my short position since we are shorting. So if I enter the trade at this point, this time I can set my stop loss to this key area right here, this one, or I set it to this area right here. So that means that you don't want to lose too much money. But if you want to, maybe you want to risk higher, then you can now go to this point right here. So let's, for example, there's another key level at the top. You can even move it higher. But for this analysis, it is between this area or this area. So these are the two areas that you can move your stop loss to. Now for the take profit, you can move it lower. So let's, for example, there's another one, right? We can't be able to use this one because we are assuming we enter the trade here. So we are assuming nothing has happened at this point. So we can't use this. So let's say, for example, there's another key level at this point. So let's say there's let me move this down. So let's say we have another key level at this point. So let's say our key level is here. So you can now move your take profit to this point, or let's say anywhere you have your key level, you can move it there. Now, the reason why I always advise to use key levels is because you are sure to a certain percentage that the candlestick will definitely move to that key level. So that's just the meaning. So if there's a key level at this point, it's definitely moved there because it's moving down. Consider that, let's assume there's a key level here, it has moved down even at this point right here. So I hope you understand what I'm trying to say. So these are the 3 main ways you can use to set up your take profit or your stop loss for this strategy. So you can see in this single video, I've taught you how to use a simple trading strategy using your trend lines, support and resistance, and breakouts, reversals, candlestick patterns, which you can learn from my course, and also how you can set your take profit and your stop loss with 3 different strategies. Now, before I go again, I also would like to mention one more thing. You know, at the beginning of this video, I said you can use this strategy whether you're a day trader, a scalper, or a swing trader. Now, everything you are doing on your chart will be the same. The only thing that will just be different is your time frame. So only your time frame that will be different. So if you're a day trader, your time frame will be different from a scalper's time frame, and if you're a scalper, your time frame will be different from a swing trader's time frame. Thank you for watching. I'll see you in the next video.